from a valuation standpoint. Again, our journalist investors, typically we focus on business services, manufacturing, those types of businesses. With respect to deal sourcing, we do have a significant proprietary network that we've developed over the number of years we've been in business. One important component of that network is business advisors and intermediaries, such as the March Group, and they play a very important role in our deal sourcing and our deal flow pipelines, and looking at a lot of opportunities through that avenue.
And why are they important?
An experienced advisor, can be very important to a transaction and add value, really through helping the business owner navigate the process, which can be complicated. We do this for a living. A business owner typically will sell once in a lifetime, and we understand that and appreciate that. And so an experienced advisor, can really help them understand the process, help manage expectations, help gather and interpret data, and generally just give them support through the transaction process, which again can be complicated, and sometimes that can be emotional support, because these transactions do tend to take twists and turns, and they can really bring their experience to bear and help a business owner through that process.
Actually help with the emotional component of this process. Could you just you don't have to say it exactly the way you said it, but just to address that they can actually be helpful in terms of the emotional aspects of doing this.
Okay. An experienced, let me start over, sorry.
Sure.
An experienced advisor can really add a lot of value to the transaction by providing the business owner with support, most importantly emotional support throughout the transaction, as these things can take twists and turns, and having been there and been involved in a lot of different experiences, they can help relay those to the owners and just help them understand what to expect, and that things that come up in the transaction process are typical, are customary, and just help them understand those things and navigate the process.
Great. Okay.
Okay. An advisor can really help on the front end of a transaction by helping the business owner understand what a investor or buyer, from our standpoint, is typically looking to see, help prepare the information, put it in an organized format, help field follow-on questions from the buyer, gather additional data, help analyze that data. That can be very beneficial, because typically a business owner is running his business on a day-to-day basis, and this transaction can be a very significant distraction to running the company. And so it can be very useful to have a third party involved to come in and help them gather information, field requests, and just take a little bit of the pressure off of the due diligence process, and help them focus and maintain their attention on the business. With respect to follow-on acquisitions, we as an investor group don't focus on acquisitions as a growth avenue for our existing portfolio companies, but we will consider and pursue them on an opportunistic basis, depending on the situation, the financial structure of the company, the opportunities in that particular industry. We have made add-on acquisitions, and we will consider them, but that is not a focus of ours in terms of growing these companies. Okay, with respect to exit strategies, the beauty of, I'm sorry, I'm spinning here, okay. With respect to exit strategies, the beauty of our model is we don't really have a defined exit strategy. We're very long-term investors, and typically focus on an exit from the standpoint of what makes the most sense for the business, what are the desires and objectives of our management team and partners in the business, and are not traditional private equity investors in that we have a defined holding period and have to flip the company in 3 to 5 years. We can hold a company for 10 years if we have to, and do not have a gun to our head in terms of what we need to do with this business. We're looking to partner with a strong management team, and to a large degree, we'll take their lead on what's best for the business and what's best for the overall investor group as we proceed through the relationship.
And I also heard you say that you were willing to take a minority position. So could you address that? And in those cases,
in addition to control transactions, we will also consider minority investments. That could take the form of an investment for growth capital, where we're injecting capital for some type of growth initiative, whether it be an expansion, or it could be an add-on acquisition, or it could just be working capital. We will consider those, and we'll consider doing those through a combination of debt and equity and take a minority position in the company. We will also, I was about to move into control recaps, but that's not really what you asked. So.
Anytime.
Okay. With respect to leveraged recaps, we will look at a variety of situations, including both minority and control positions, depending on the economics of the transaction, the desires and objectives of the owners. If they are looking for a value opportunity in the lower range of an overall enterprise value, we can come in and do it on a minority basis. If they're looking for something that really looks more like a sell in terms of the amount of value they're looking to take off the table relative to the enterprise value, that would most likely take the form of a control leverage recap, which would typically be done on a combination of debt and equity, and again, really depending on the amount of liquidity that the owner is looking for. Okay. With respect to timing of a transaction, I would say from my experience that is largely driven by the owner's objectives and what he's trying to accomplish. I wouldn't get too caught up in what's going on in the market and what you read in the newspapers. That typically is more focused on larger cap transactions. I think this audience is largely small to medium-sized businesses, and really I would pursue a transaction at the time it's most appropriate for personal circumstances. A few examples of things that cause deals to fall apart. The first thing that comes to mind is inexperienced legal counsel on the part of the sellers.